can tell you one thing. It's not as like people or investors are not looking at it the way they are looking at multifamily or other or public storage, but retail plazas has its own advantage.
Welcome to Investing for Generational Wealth. I'm John Lai from Clive Capital, where we help high earners just like you invest outside of the stock market to passively achieve long-term wealth generation, long-term passive income, or cash flows, and tax benefits. And together with investors, we're investing and renovating over 100 apartments and 500 single-family rental homes. And we're expanding to exciting asset classes like private debt, industrial, commercial, real estate, as well as oil and gas. And before we begin, quick disclaimer, as always, we're not financial advisors, so all investments are subject to risks, including the possible loss of income and the money you invest. So perform your due diligence before making any investments. And of course, consult your CPA, your attorney, and whomever you decide. I'm your host today, John Lai, and welcome to today's episode, Investing in Retail Shopping Plazas. And today's guest is Manish Pushye. Manish, his journey began 25 years ago with just over $700 and an engineering degree. That's amazing. Over the years, he's built a multi-million-dollar portfolio spanning cell phone retail, scrap metal trading, manufacturing, and liquor stores. His ventures include scaling businesses to seven figures and navigating complex markets. Today, we're going to be talking about his latest ventures in investing in retail shopping plazas. So thank you for being here today, Manish. I gave you a little bit of background, but do you want to expand on where you got to where you are today?
Hi, John. Nice to meet you. And I was expecting Keshav today, but that's good. We'll have him some other time. But it's nice to see you. Hey, John. So yeah, a little bit about my background. I mean, I came as a software engineer, and I worked during Y2K time. I'll say 99, 2000, and Y2K didn't go as expected. So, that's what my journey. I was like, either I go back home to India or I stick and do other things. So I started working as an Oracle app developer for a couple of years until I got my residency. And then I moved to, business. I started working in the malls, like selling cell phone accessories. And at one point, I had my own 28 carts in different shopping malls. And that's how my entrepreneur journey began in the year 2003, I'll say. And then Amazon really came over and started selling all these products, and there was no point in competing with them. So I really took an exit at the right time. And once we're done with that, I got into scrap metal trading, and in fact, I own a piece of real estate in Arizona. Um, Scrap metal was good, but there was a lot of, I mean, again, lack of capital is the reason people make switch to businesses. And that was a good game until I could not secure good line of credits, a big line of credits. So I realized, scrap metal, I have to take an exit until I have a good big line of credits in place. And real estate happened by chance. Everybody start with single family residences, and that's how I started my investments. And I did creative financing, whether seller carry, sub to, subject to, and all that. And in fact, now I see a lot of kids talking about creative financing, but I was doing it since 2009, 2008. And but then I realized, the kind of time and energy you spend on single family, I mean, it's better if you do bigger properties, and because the time and investment is the same. But the returns are lucrative, right? I mean, the returns are great. So that's where I that's when I acquired what we call an industrial warehouse, the whole plaza. And that was a good move. That really gave me a lot of insight about commercial real estate. Otherwise I was just doing the single families, renting them, like long-term renting and all that, not even STR, MTR, any of that, just long-term. And it was going good, but commercial real estate gave me a good understanding of real estate. And then COVID came, I realized, and when I was doing this commercial real estate acquisition, that time I was also doing online business. I was selling online on Amazon, eBay, and not TikTok. TikTok came now, Walmart a little bit. That was also a good because my dad, he was making gas tanks, diesel tanks, like those plastic and metal, and I was selling them online. So it was going very good until COVID hit. Supply chain took a hit. And that's when I realized I need to have something which is 24/7 or 7 days a week. I cannot rely on something that's coming from Asia. If the containers or supply chain take a hit, I cannot take that kind of chance. That's when I acquired my first liquor store in Mesa, Arizona. And it turned out to be a good venture for me. But then I realized it's better if I have these stores, but I also own the plaza, the retail plaza where I have these businesses. And John, I acquired one and with my own business in it. And I realized, oh my gosh, I can take care of investors in a much better way if I have investors. And because right now I was investing out of my own pocket. And you can go so far with your own investments, right? So that's when I realized if I have investors, I can definitely show them good returns because returns are good. Uh, these businesses, whether it's liquor store, whether it's a wing stop or wing shop or whatever, these businesses are after COVID, they are doing great. And liquor store drive-through, it's a good lucrative business. So not only triple net character of these retail plazas are attractive. I mean, on top of that, if you have your own business in 1 or 2 units, let's say it's a 6 units plaza, and 1 or 2 unit is basically you have your own business, it's phenomenal. It's really great.
That's
So
wonderful. Yeah.
the details I can, yeah, tell me or what else you want to know about the retail store. I can tell you one thing. It's not as like people or investors are not looking at it the way they are looking at multifamily or other or public storage, but retail plazas has its own advantage.
Um, did you find that your retail experience, growing up, doing all the different
Yes.
opportunities that you had, helped you with your retail plaza investing experience?
Yes, John. So I learned from my experiences. When I was doing those cell phone accessories and cell phone businesses, I was doing it all over the place. Like I used to have business in California, Colorado malls in New Mexico. I used to live in Dallas, Texas at that time, and in Oklahoma, Texas. And I realized in future, if ever I do any retail, it has to be in the same vicinity where I live, like 40, 50-mile radius, because one, it's control, like you have a control over your business. And
Right.
second, you can do so much, like from having a regional manager, have shift managers. I mean, if the businesses are not in the same state where you live, I mean, I'm not saying it's not possible to, but for where I am right now, I don't want that kind of headache where I'm living in Arizona and my businesses are in Texas. Right now, what I'm doing, I have all my businesses are in 40, 50 mile radius.
Got it.
So it's very much control, and I can be there at any given point. And also employees are aware of the fact that they cannot, play with me or
Yeah, yeah,
they
yeah.
have this mindset, right? I mean, they know the boss lives in same town, so he can visit us any minute. And that little mindset is good for anyone working with you.
Are all of your retail plazas in that 50 mile radius as well?
Yes, right now that's what's the situation is, but in future, who knows? Yeah, but I would like to keep it in Arizona. I mean, I'm not going outside Arizona. One, Arizona is booming and growing, you know. Second, there is so much potential. There's growth, right? So the real estate is booming, and and there are opportunities everywhere. So when people they try to, they live in one state and they do other states, it's easy to start. But when those problems start happening, it's not easy to manage. I have experienced all that during my cell phone days, that I would like to keep it simple, and I would like to keep it as control. I mean, I'm kind of a person who wants control on my businesses. I don't want to be ruled by
Right,
anyone.
right,
And
right.
and I should be in a position, in little or no notice, I can be there, for whatever situation. So for that kind of a situation, yeah, I'm enjoying my setup.
You talked a little bit about your buy box. Could you expand on that? Like, what is your buy box? And then I think we'll get to a question as to like how investors should think about, and really passive investors should think about investing in retail plazas. But what is your buy box?
So I don't go for big plazas, like I don't go for like Sprouts or anchored by gym or any of that. I go
Mhm.
by a small, like 5 to 10 units, or I mean, so far that what I've done. If I come across a bigger plaza and the financing is lined up, why not? But
Mhm.
at this point, the one I'm working on got five tenants, and one of the tenant is my own business. It's got smoke shop there. So so it's good because the other four tenants are taking care of the rent, right? And my business is also paying rent to my other entity. I mean, we're all paying rents, but on top of that, my business is generating revenue on regular basis. It's open 7 days. This one is not open 24/7. We close at 2 a.m. So the business generates revenue, and we are telling investors, you are not only secured by the real estate, you are secured by by the returns from the business as well. So I mean, basically, they are getting benefit from both the sides. So let's say if the real estate market crash or whatever reason, I mean, I'm not saying it's going to crash, or it might slow down, but then they can still have their cash flow, as well as they can have their returns on time because of the business, in that plaza. So the
Uh,
buy box, when you say the buy box, yeah, as I said, I'm looking for investors, who believe in 2 to 3x targeted return in 3 to 5 years whole period. And at the same time, we are 506 C fund, so obviously we are looking for accredited investors. And right now I have few investors, and they really like me because and they are spreading the word of mouth, for me. So that's helping me with the pace I'm going, but I think I have more deals lined up. than the kind of capital I'm raising. So I would
Hmm.
like to have more investors. And the kind of IRR, most of our projects are 20 to 28 IRR. And on top of that, we pay like 6 to 9% pref, depends on the amount of investment, and it's monthly. We pay our investors every month, and at the same time, quarterly reporting, and yeah, 2 to 3x. Even though our returns are great, but we want to underpromise and overdeliver, and that's what we are doing. We tell our investors expect 2 to 3x kind of exit, you know, uh, with your investment.
So lots of questions. One is, so why 5 units? If and I'm thinking primarily from a diversification perspective, like to diversify, and I'm also looking at maybe apartments as an analog, right? Like if one apartment is not leased out, at least you have the 99 left. So is it more better, or is there some fallacy to that?
No, I mean, again, I'm just trying to play safe. I can go for bigger, shopping plazas or units. I mean, that's not a problem. But uh, at for time being, the kind of investors I have, they are not like that big. I mean, so let's say if we are talking about big shopping plazas with anchor like Sprout or some gym, a big multinational gym like LA Fitness or Mountainside or whatever. Yeah, you can go with that. And but the point is, what if they live and then
Right,
you have to find a new tenant, and that's a big chunk. They are paying you the big rent, right?
right,
So
right.
but with these smaller units, if somebody leaves, I know I can put my own business. I would rather want them to leave, and I bring my own concept, and whether it's I mean, I'm not saying for the sake, I mean, it could be a sports bar, it could be yeah, any fast food, concept or anything. But so that's the angle. I mean, I don't mind doing bigger shopping plazas, but at this point, I haven't done it. I don't know how it's gonna go. And I have one plaza I'm working on. It's got a good size open space where I can put a like a dance club, a
Yeah,
nightclub.
yeah,
And so those ideas are there. And nightclub is also a good, it provides you good return. So
yeah.
yeah, I'm open to anything and everything. Depends on the place, depends on the demographics, depends on what kind of plaza we're talking.
What do you stay away from when you look at investments or potential investments?
I mean, I I don't want to put too much on rehab, so I stay away from plazas which are way old. Because then I'll be spending my time and effort on rehabbing and fixing those places when I can put my time into better stuff, right? Adding businesses to those plazas, like liquor stores, convenience stores, or coffee shop, you name it. I mean, I would rather want a good decent, not way old, like in 1900s, or, like a 2000 plus 2000 onwards, plaza, that really serves me good. And because you don't have to worry about renovation or, capex and all that.
Got it. Um, and what should investors? So we have a number of individuals that are technologists, they're software engineers, they're consultants, they're marketing. They're not knowledgeable about investing in retail plazas. They may be knowledgeable about traditional apartment syndication, but not really about apartment plazas and retail plazas. What do they look for when they're looking for an investment as a passive investor? So most likely they'll invest in someone like yourself. And so I would imagine like be comfortable with you and your experience, right? And to see that you have multiple of these plazas and maybe have gone full cycle. But what else should they be thinking about?
John, I'm for trailer park or anything, but I believe in value add.
Mhm.
If you have a trailer park and it's like a 200, 200 trailers can be parked there or whatever. I believe in adding a, some kind of a convenience store there, so that those people they don't have to drive, they can get everything in that parcel of theirs. So I believe in all that. If I go and find a 50% occupancy or 70% occupied plaza, oh, I'm excited because those 30% I'll add my own businesses. And
Right.
there is endless opportunities. You can put whatever you want, and you can put one manager to operate or to manage all those businesses. So those things really excite me when, if somebody like yesterday, I got a message from this one guy. He saw me on LinkedIn or wherever, and he saw I'm doing retail plaza, and he's based out of California, but he got his shopping plazas in Arizona. He was like, "Hey, can you put one of the liquor store in my plaza?" I'm like, "Yeah, I can do that, but I would like to buy your plaza because my investors, that's their buy box. They want to invest with me if I own the real estate, plus I have my own businesses. Not only liquor store, I'll put whatever is missing in that plaza."
Yeah.
And that way, I have a team of 72 plus employees here in Arizona. So, taking care of all my businesses. Yeah, how I know? Because every Friday I write them checks. So, yeah. So the concept is shopping plaza plus few of your own businesses in those plaza. That's basically a trick, if you ask me.
And why the latter? Why owning your business inside a retail plaza? Well, I mean, besides the revenue that it potentially generates, um, why do you typically have those?
You mean I didn't get.
Your personal businesses inside the retail plaza, like what benefit does it derive? Perhaps it's just the income, but like, does it generate other type of benefits?
Yeah, I mean, you buy businesses, you can take, benefit or depreciation, tax
Yep.
benefits. Oh my
Yep.
gosh. You won't believe, and this is a secret I'm sharing. I just acquired a liquor store, basically a smoke shop in Avondale, Arizona, with zero out of my pocket. I
Hmm.
basically bought it for $2 million, and basically the guy gave me the seller financed me 1.5 mil, and the other 500K I was supposed to bring in, and I called my inventory guy and told him, inventory finance guy, and he financed me close to 285, 300, 285, something like that. And the remaining 200K was financed by the revenue, the revenue finance guy. So I hardly have to put, I mean, and I'm not a big fan of zero out of pocket because eventually you have to make those payments. And when you
Right,
make
right,
those
right, right,
payments, so when people say, oh, zero out of pocket, I mean, it sounds interesting, it sounds great, but hey, it's not like you got everything for free. You have to make those payments. And
right.
when it comes to pay those debts, oh my gosh, then you realize what the heck, there's nothing exciting about zero down or whatever.
Yeah.
Yeah, eventually you have to make those payments, and yeah, if you don't have to make those payments, then it's exciting. Yeah. But that didn't happen. So, but the good thing is that business is generating me almost 80 grand a month, so almost $1 million a year in net income. And after making all these debt payments and everything, I'm still taking 25 a home.
Yeah.
So what I'm saying is, and then the tax benefits, I showed a real good depreciation because I did so much inventory add up, and the fixtures and furniture, FF&E and all that. So
Mhm.
that really helps you with the depreciation and tax breaks. Oh my gosh. And one thing I tell my investors, if you want to take tax breaks and you want to understand, how I work with depreciation and I have a good experience. then you should come invest with me. If you are not one of those guys who, if you're okay paying Uncle Sam, then I'm not your guy. If you really want to save, yes, I
Do
can
do
tell
you,
you
I was going to say, do you run cost segregation in
cost
your line of business?
segregation, and
Okay,
yes, I take advantage of all that.
got it. Got it. Okay, that's great. That's fantastic. People who are passive investors, how do they find out? Well, A, how do they invest with you, right? And do they have to typically, like, what's the minimum? And do they have to typically invest in all of your deals or just some select deals?
No, they can invest in all my deals, but I would prefer, I'm not against 50K small investors, 50K if they want to start with that. But right now, my investors are in the range of 400K plus, the kind of investors who are investing with me, between 400 and a million. So that serves one plaza. So I don't want to, and then that investor knows there is no other investor for that particular asset, and they feel comfortable. They're like, oh,
Right,
good, I'm the only LP with you, or I'm the guy with you, and that's another benefit. When they see there are not many people involved, and I'm the only one, they get preferred treatment, and they love
right,
that.
right,
They
right.
love that, and they really find it interesting. And so they keep asking me, what's the other project? So I ask them, do you have that kind of, yeah. And because the rest is 85, 90 LTV, I get it from the bank, or the primary lender. So basically what I look for is 10 to 15% down payment assistance from these investors.
Got it. Okay.
So
Um,
yeah, one investment I just did, there is only one investor, and it was a $2.6 million plaza, and he gave me 600K. So we are good. We
hmm.
don't need any other investor.
um, you said there was a typical 3 to 5 year hold. What happens after the 3 or 5 years?
So first, after 3 years, either we try to refi or we take an exit. And the good thing is, since we have our own business in there, so we try to take exit on the whole portfolio, business
Right.
as well as the plaza. Somebody who can buy the whole portfolio. Because there are people who not only want asset, they want some business as well, and they love it, and you get premium for that. So either we take an exit or we refi, and
Hmm.
give this particular investor an exit with what we promised, or what has been targeted. Or there are 10 different ways we can we can take an exit.
What's a surprising thing that you learned about retail plaza investing that you maybe didn't know before you invested?
John, honestly, I tell people you have to take a leap of faith in whatever you do, and just do it. And yeah, it might turn out to be something that you didn't expect, but what if it turned out to be what you expected?
Well,
and and that's where the trick is. And I'm excited, like not many people are talking about shopping plazas and the kind of business model I got, and that's good.
yeah.
But if more people come, that's okay too, but people, honestly, what I have seen, they don't want to deal with workforce, and I'm okay with that.
Mm.
I'm okay to have a workforce and deal with guys and have regional managers, shift managers, store managers. I'm okay with that. I'm okay with dealing with. I love my employees, and my employees are the reason where I am right now. To be honest, I credit everything to these 72 employees who are working with me. To all my successes because of them.
You have a question. We have a question that came in, but one question that I had and that you brought up just now is like, why aren't other people, other investors, either GPs or LPs, investing more in retail plazas versus the traditional apartment syndication or whatever asset class there might be. Why do you think that might be? I mean, if you said workforce is one thing.
They don't want to deal with employees, too
Right.
many, to be honest. I mean,
Yeah.
they want easy. That's how I see it.
And
They want
I would
return.
imagine like during COVID as well, like they had a bad taste through COVID, right? All the retail shops, a lot of retail shops closed. And
Liquor
people,
stores not. Liquor stores were open
the liquor
and
stores, yeah, exactly. Um, but they probably have a bad taste from that. But recovering from that, that also is probably an opportunity for you at that time, right?
yeah, and when COVID kind of a situation happened, people are tired of sitting all day in their home. They want to go at least, go and see, and during COVID, we did numbers, you will be surprised. I mean, so I don't ask for COVID again, but COVID kind of
Right.
a situation is good for retail. Depends. And now whether it's fast food, uh, I mean, you don't see people, but they're getting a lot of orders through Grubhub and all these delivery companies, big time. Oh my gosh, they don't want people come and sit in, because they come and sit and they have to clean and they have to clean the table or whatever. They're happy with the deliveries.
The question that came in is, how do you typically find your deals, specifically the multi-unit shopping process? Is there a website or a platform or someone to shop for that type of investment? How do you go about it? I would imagine like brokers. I don't know if you work with brokers.
Honestly, yeah, brokers are one source, but when you are in this trade, people, for example, I had this one parcel in Arizona. The next parcel guy find out like I bought this, so she contacted me. She was like, hey, are you open, are you buying more, or what's the scene? Because she saw my acquisition price and all that, she was interested. So she called. So basically it's a word of mouth too, it's
Mhm.
not always brokers. And then she sold me, and then one of her cousin used to own in other towns in Gilbert, and she called me, hey, you bought one from my cousin, I own similar kind of a parcel, you would like to come see? I was like, yeah. And LinkedIn and people contact me. I mean, I'm telling you, I got a lot of deals lined up. It's the kind of capital. And I'm not saying I'm gonna acquire anything and everything. I have to go by my own pace too. I have to enjoy each acquisition, and then move on to next after some break. I don't want to acquire one today and next tomorrow. No. I'm fine with the pace, but at some time you really want to scale. You want to scale. And now I know my game, well, the way I'm playing it. So I'm okay to scale as long as it's not going to backfire, right? You have to consider all that. You have to be careful that, and at the same time, I have to reward my employees because they equally work hard. So let's say we acquire a new store. I tell my regional manager to add more employees there, and then we have our own POS, and we have our own SOPs like system operating procedures. So we have to apply those in all the stores, and come up with our own strategies, because, and the businesses, usually those we acquire, I love these liquor stores and some businesses, because those owners were working by themselves and they were so burnt out. Those are the kind of businesses I love and I
Mhm.
acquire, because they burnt out, they just give you at pennies, and they take an exit. And that's what you love, right? I mean, when somebody is really burnt out, he's done, and you just have to put your managers and your guys. Yeah. The only thing I try not to do is, like distress areas where there are like hardly any, there are few places, few zip codes where there is a crime, or, crime is high, and I try to stay away from such areas.
Got it. Okay. Uh, what do you see? What do you see in 2025, especially with I don't know if interest rates impact retail plazas at all. If I mean, sure, impacts it from a debt perspective. But that, and then just our current administration, or maybe even just in your region in Arizona, do you expect any changes in 2025?
John, I have borrowed money from hard money lenders. So when you have dealt with hard money lenders, there's
Right, right.
fluctuation, interest rate going up or down doesn't affect me, to be
Yeah,
honest.
yeah.
No. And I go by the opportunity. I don't see the economy because I know my trick is I'm going to add my own businesses in that plaza,
Mhm.
and the less occupancy is even better. And the concepts are humongous. You can put sports bar, you can put, you name it, you can put it. And when people say, how have you done those businesses before? To be honest, any business is input and output. And the rest, you
Mhm.
can bring the experts from out, you can hire experts. I mean, if I am opening a wing shop, I don't have to prepare wings myself. I just hire
Mhm.
guys
Right.
who cook the wings or who will prepare it for me.
Yeah.
And they should have the experience, not me. I mean, I just want to facilitate and I just want to provide him what he needs.
Right.
So
Right.
businesses um, is one, like, they ask me sometimes, how you have you done this before? I'm like, no, but I know I can do it because it's a process. It's a process. And yeah, I will have some difficulty in the beginning. I'll have people, maybe they are not going to do what I expect out of them, but it's the process. I'll let them go. I'll hire new ones and see what they have to offer and go from there.
And I appreciate that answer. I was going to ask, as a follow-on, you hear about startup businesses, especially like uh, fast food type of establishments, not necessarily the chain ones, but businesses, food and beverage businesses going out of business after a year. Do you see that cycle, and how do you mitigate that, or is that not necessarily a problem for you?
No, the reason being, it all depends on your management style and what kind of employees you got and what kind uh, of where exactly that business is. For example, I'm not going to put a wing shop in an area where, people are very health conscious or they don't go for that kind of food or, I'll be putting a pizza or wing shop in an area where people will go for that food, so
Right.
it all depends. If it's high upscale area, I'll go with some kind of beer and burgers kind of franchise where they want to hang out. And so it all depends on the demographics, all depends on what kind of area. But the food business, honestly, if you have a good staff and good representation, it's the best thing you can ask for. I'm talking from my sports bar perspective. Oh, we offer all kind of amenities, and people love it. And that sports bar brings adds so much to that shopping plaza that that sports bar can take care of my investors. I don't, the other tenants rent just goes to my pocket.
Yeah,
So
that's good.
when, yeah, I'm concerned about the people who do just shopping plaza, but they don't have their own businesses. I don't know how they, so my nature is I put my own businesses in those plazas. That's make me different from others.
That's interesting. Yeah. Thank you for that. Um, uh, I would encourage those that have questions. If you have questions, drop the questions into the chat. Um, can you talk about any businesses that didn't go according to plan? And
Yeah,
I'm talking
I
specifically like failures, but anything
yeah,
that didn't go into plan. Yeah.
yeah, I put this barber shop and that didn't go as and I learned my lesson. I sold that. But the good thing is I end up selling that business. So I made money in selling their barber shop. I should not have ventured into something like that. Even though employees were good, everything, but I could not market it. I could not bring traffic to that,
Well,
so I sold it. I sold it to someone who got that niche and who is barber himself, and he's a hairstylist. So that those are the ventures I try to stay away now. I don't want to do something like that. But convenience stores, sports bar, fast food chains, restaurants, or your own, yeah, any given day.
yeah.
Taco place, oh yes, any given day.
A question that came in that's related to this. Are you franchising any of those businesses that you're putting into your plazas or putting in new
Not
businesses with your own brand?
honestly, I was told to do that, and I'm considering it, but I'm so busy with my current landscape that I am not even thinking on those lines because there are so many projects lined up. There's so much you can do, right? I mean, yeah, at one point, I will definitely give it a thought. I'll definitely talk about it and might have some franchise expert come and work with me, and do all those things for me. Yeah, yeah, but
Um,
not at this point.
Not at this point. It dawns on me that if I think about retail plaza and investing in retail plaza versus like apartments and maybe more like self-storage, low personnel, right? So low overhead from a personnel perspective, low really maintenance, right? Once it's up and running. And yet like self-storage, maybe it's the competition. And so the monthly revenue that they generate is low. Um, it's not as lucrative as what you were saying you're getting from a retail plaza perspective.
Dude, these businesses, standalone businesses, sometime, one business I put in Avondale, Arizona, I did not expect much out of it, and it turned out to be a gold mine.
Hmm.
So, and because of
What business was that?
drive-through location, it is a liquor store,
I'm not even sure. Yeah.
drive-through, and I never tried drive-through before, and so you never know.
Yeah.
You experience, you try things, and sometimes they turn out to be dirt, sometimes they turn out to be a gold mine,
Huh.
and that's my experience. I just do things. Now, I mean, I try to find places if there is no liquor store, convenience store, 7-Eleven kind of stuff, I immediately jump on that plaza. I would like to add one there because that, or even a coffee shop, or even some kind of a taco place or wing shop. I mean, you name it.
Are there any, having done this for so many years now, are there best practices that you can impart to others, either as GPs, potential operators in this space, or as LPs, like your investors?
See, you have to have a team with what I'm doing, to be honest.
Yeah.
This is something cannot be done like we do, like public storage or or multifamily. This is the thing where you need team because one of my shop has 11 guys working there because it's 24/7 liquor store.
Yeah.
So what I'm saying is, yeah, you will need personnel in this kind of business, but it's a process, and there are so many employees come and go, and that's okay. But you just hang on to it, you keep going, you keep doing your thing, and you keep achieving your numbers, and that's it. I mean, at the top, and in your mind, it should be a number game. Like if you are doing certain numbers, you have done certain numbers last year, this year, you have to tell your team this is. And honestly, I pay my team good bonuses if they achieve certain numbers. We have targeted numbers, and I tell them, let's do that. And they really, and that's one reason not I don't have much retention, not many employees leaving me because they don't see that with other employers where I let them keep their tips. I've heard horrible stories where people, the other shopkeepers or employers, they take the tip, they don't care. So you just have to be, thankful with what they are doing for you, and you have to be generous. And that's how they stick with you and they love you and they keep going for you. So that's the story of That's the thing I have experienced. You have to pay them what they deserve.
Could you talk about, for those that are thinking about operating a retail plaza, how you structure your team?
S- I mean, acquiring a shopping plaza or running a business in the plaza.
Um, Both. I know they're kind of
Okay.
separate entities, but both.
Yeah. So again, you have to see what kind of acquisition is it. If it's got a lot of occupancy, a lot of, or there are a lot of empty spaces. I love something between 50 and 80 occupancy. If it's 50, even better. 80, I'll take it. And then I see what concept is missing in the plaza. And then I start brainstorming and see what concept I can bring in, whether it's franchise, non-franchise, or my own thing. So basically that's the curriculum I follow. And then I start doing my research, what kind of concept I have to put, and then I have to do TIs, tenant improvements for that spot. And like if there is a big anchor or big space available, I would like to put a nightclub or whatever, it all depends.
Are those, sorry, are those your businesses that you're putting in, or are they, and when you say put in a nightclub, are you,
So sometimes I establish my clubs and then I sell them off,
yeah,
so it depends. Yeah, right now I sold my nightclub in one of the plaza. So it's not mine, but I started that.
yeah,
And that's the thing I go with. So the basically 50 to 80% occupancy is good.
yeah,
And you go from there. And then, once you close the deal, you find out what concepts for that demographic, for that area will do good.
yeah.
And you go from there. So that's my style.
Got it. Okay. That's a good approach. It's almost like a strategy and consultative approach. Like you understand the market, you understand the needs, you understand what's demands are being unfulfilled.
I have 7 to 8 guys. They are like my main right hand, left hand, you want to call them. I mean, and I take their advice. What do you
Yeah,
think for that? Yeah, and these young kids are so smart, man. They come up with the concepts you won't believe. And they tell you, oh, let's do this, let's do that. And then we go check on existing one somewhere, which is already going on, and we like it. If it's getting good traffic, we're like, okay, let's go for this.
yeah, yeah. I like that. The secret shopper
The
approach.
shopper, yeah, concept always work, always work.
Yeah. We're getting about that time. Um, what and how do you get back to your community?
Get back to what?
Your community, like how do you get back?
So, I always get back to my community in variety of ways. I tell my wife you know, right now I have this one place, um, one warehouse unit. It's almost 4,000 square foot. One of the tenant just left. I was telling my wife we should put this place for homeless people, like we feed them, or even veterans, or people who are challenged, or they can, those who are less fortunate. And honestly, I want to do that. I was telling her if she can help me, let's try. And I'm looking for voluntarily, I don't want any compensation out of it, non-compensation, but I really want to do that ASAP. Otherwise, I really believe in helping others to the best of my ability. I am, in fact, there are so many friends, they keep asking me from time to time my advice, with the businesses. I have sold businesses for pennies to my friends just so that they can operate it, and they can, and they were in software and now they want to do something outside that, or they want their wife to have some extra spouse, extra income or whatever. So I do my best to help, the best I can to my ability, but it's always work in progress.
That's great. Well, thanks for that. And hopefully, you'll do something eventually with the warehouse.
Yes, yes.
Yeah, but
I'm
that
really
sounds really
looking forward.
exciting.
Yeah, I want to feed homeless people in our, and I would like to do that as much because giving is the new getting, if you ask me. I mean, the
Right.
more you give, the more you get. I mean, that's the mantra I have seen. You don't get things until you give.
Yes.
That's my experience.
That's well said. That's great. Thanks for that. Um, well, we're at the top of the hour. Thank you very much for the great conversation, Manish,
Hey, thank
and
you,
thank
John.
you.
I appreciate it.
Yeah, thanks for everything you've imparted on educating us about investing in retail plazas. It's very exciting, and then your experiences in operating businesses as well. How can people reach you if they wanted to learn more information and
So
possibly invest?
they can find us on LinkedIn, Manish Pushye. Otherwise, they can go to awesomeroi.us or .com, and email is deals like DEALS at awesomeroi.com or .us. They just sent us an email, and we'll answer all their questions.
Okay. Again, thank you, Manish, for taking the time out of your busy schedule to speak to our audience. Don't forget to like and subscribe to our podcasts on whichever platform you're listening to, and
Oh,
to make sure
definitely.
that we can continue bringing you this educational content. And thanks, everyone. Until next time, keep learning to invest for generational wealth.